Welcome to the Ask JT podcast, where we simplify tax, finance, and business decisions for UK business owners. I'm Justin Turner, an accountant, business owner, and author. I'm going to share practical advice and help you run your business more efficiently and keep more of what you earn. Welcome back to the Ask JT podcast. I'm Justin Turner, and today I'm going to tell you about making tax digital for landlords. So there's a big change coming, and you need to be aware of it if you're a landlord. So if you've got rental income of over £30,000, HMRC is going to make a major change. Not in a bad way necessarily, but it's definitely going to require potentially more paperwork, more software, and more headaches. That's just the reality of the matter. And I think it's important for us to get on top of this now before the change actually comes into effect. I'll break this down for you so you know exactly what's coming and how to stay ahead of this so you don't get into a situation where you're like, oh my God, this is chaos. So what is making tax digital for landlords? What HMRC is saying is if you've got rental income of more than £50,000 from April of 2026, you're going to have to start making a making tax digital self-assessment. From April of 2027, it's for anyone who's earning more than £30,000 in rental income. And it's important to note that this is gross income. So this is before you take off any of your estate agency fees, repairs, or interest or anything like that. That's your top line rental income. What's going to happen is you're going to have to start making digital returns using software. There are no real bits of wiggle room on these thresholds either. There's a little bit of a sneaky part as well with HMRC. It's going to look at your income from the two previous years to decide if you're in scope. So for example, in 2023, if your rental income was 52,000 and then you're thinking, oh, hang on a minute, it's going to drop the following year, I'll have another year before I go into it. It's unlikely to be the case. And most likely, you've probably received a letter from HMRC. One of my clients had received one of these letters, hadn't even opened the envelope. So if you've got any unopened post or you haven't really read the letters properly, go back and have a look at those letters that you've got at home from HMRC and see whether they're going to pull you into scope. And once you're into this system, you're in, basically. I think the only way that you can get back out of it is you're going to sell up or you're going to drop well below the threshold. So imagine if you're just under £50,000 at the moment, and the year before you were just over, you've been pulled in. Of course, in April of 2027, that threshold's going to drop to 30,000. So even selling a couple of properties might not push you below that threshold. So you've just got to think a little bit about how you're going to do it and what you've got to do next. So what do you have to do next? So let's get into the nitty-gritty of this. Well, firstly, you're going to have to keep digital records of your rental income and expenses. You're then going to have to submit quarterly updates to HMRC, and then you're going to have to file an end-of-year final declaration, which is like your basic self-assessment. As I understand from all of this, that you won't be putting things like your PAYE income, if you've got a job, onto these quarterly returns, but rather it'll be going onto the self-assessment. So instead of doing one tax return a year, you're now looking at 4 reports and a final wrap-up. So we're going to have to get away from all of these scribbled notes in a diary. Excel's not going to cut it anymore unless you're using kind of specialist bridging software, which I would avoid you doing. So you're on borrowed time. And what I would suggest you do is you don't leave it till April of 2026 if you're in the first wave, or April of 2027. I would suggest you start doing it now so you really, really understand how it works and you feel completely in control when it comes to those deadlines. So what you're going to need software-wise, that's the $1 million question here, is you're going to need MTD compliant software. Our solution that we provide to our clients at Orange Umbrella is something called Xero, Xero. I think Xero's got a fantastic product. We're really, really pleased with it. And in particular, they've just launched a cut-down license specifically for MTD, and it's called Simple. So they have obviously different subscription levels, and the Xero Simple product is probably the one that you want to go. Unless you want to put all of your income and expenses in, then you might have to, if you want to you to track those paper receipts through the software, you might need to get a higher license. I've been using Xero for my own portfolio of properties for quite some time now, for years in fact, and it works really, really well. Some of the benefits of this, and I think that's where I want to take you today, is what are the benefits? It's going to track your rental income, your expenses as you go along. It's even possible to put in things like tracking categories. That's Xero's terminology for them, but they're like cost centers. For me, that's wonderful. I can literally click a button, choose a property, and I can see a profit and loss based on each property. So I can see how it's performing. It links up to your bank. So if you've got one dedicated bank account, and that's where I think you should be moving towards, having one dedicated bank account for your rental income and expenses. Don't have it mixed into your kind of general day-to-day personal goings on, because we can link that bank account up to Xero and have all of the kind of transactions. So if you're using one debit card, for example, to make all of the key purchases out of for your rental property. So if you've got your insurance renewal coming up, use that debit card, and then you've captured that transaction. So it means when you go in to do your bookkeeping for your rental properties, it's actually really, really easy because everything is there. Xero's also got an inbuilt feature called HubDoc, which is receipt scanning software. So you can just take a picture on your phone, take a snap basically, and it's stored online for you. If you're on some of the higher kind of product boundaries of Xero, then it will actually enter some of the data for you as well. So it's a good step up, and all of a sudden it gets you away from dealing with a kind of a whirlwind of paper. It's not just Xero, I should mention that. There are other Making Tax Digital products available, and I think if you just do a bit of a search online, you can see maybe what suits you best. Most of these products are going to come with mobile apps. I find the mobile apps absolutely great. You can add stuff on the move and you can see at a glance if you're looking for something. So if you're lucky enough to be lying on a beach in Tenerife and you suddenly have a query from a tradesperson and you're wondering what you paid them last time, you might be able to look up that purchase invoice on the mobile app and actually have a look at what happened last time. We're already setting up clients, landlord-specific clients, on this sort of system. And, on the whole, it's been well received. There's less faff and there's less mess. So I think the next question is does Making Tax Digital mean more tax? No, not immediately. HMRC have still said that you will pay tax in the usual way, the 31st of January and the 31st of July. So just as you're used to doing it at the moment. But let's be honest here. HMRC is asking you to give quarterly data. So I sort of suspect that they will probably move to quarterly payments. Again, I don't think that's necessarily a bad thing. The payments on account system can be unsettling for certain clients because they find that all of a sudden they've got a huge amount to pay, and then they had a huge amount of expenses the following year, and then they might be getting a refund. And I've been in this position myself. Some years my tax payment in January is enormous. Other years it's not so much because I've done a big project, and it's obviously I've got a lot more expenses to do with that project. So I think quarterly payments, actually, if I'm looking at it personally, I would probably prefer it, but we're not there yet. That's the important thing. I think what you've got to be is still proactive, saving a chunk of your kind of rent that comes in every month into a separate pot just for your tax. So, you've got those good account conduct sort of things going on as well. Anyway, I think I've given you the kind of general rundown of what Making Tax Digital. Here are my kind of top tips of what I think you should do is open a separate bank account for the rent. That's the first thing to take away from this today. I think it's one of the best admin hacks going. Use that separate debit card as well. Some of the integrations into Xero, for example, they will only work with business bank accounts. So you might want to think about whether you want to use a business bank account. Just the other day, actually, the bank that I bank with, they've just removed all bank fees. So actually, you can have a business bank account with no charges on it, which is absolutely brilliant. Other top tip is use your phone. You've got that really powerful thing in your pocket. You can snap receipts as you go. So none of this shoebox stuff in December. That would be absolutely great. My next top tip is block out maybe 30 minutes a month just to keep on top of your bookkeeping. It's really easy in these bits of software for Making Tax Digital. You just basically click a button. Where does it go? And it learns as you go as well. So the first time you do it, you might be putting a particular supplier to insurance or repairs and maintenance, and it remembers. So all you have to do is click the OK button as well. And Do remember to save a percentage of your rent for your tax bills as well. It makes life so much less stressful as well. But you must start sort of doing this soon, I suppose. What are the key questions my clients have been asking? Well, what about owning a property jointly? Right, that's a really great question, isn't it? So if you own a property jointly with let's say it's a spouse, friend, business partner, something like that, you each have to report your share of the income and expenses. So it's still the same as doing self-assessment. So 50-50 means you've got 2 sets of records and 2 separate submissions to do as well. What about if you're under £30,000? Well, you're out of scope. For now, HMRC have not said anything about anyone over that £30,000. It might come later. Again, you might think, oh, well, they might pull us in later. I might do this. Moving digital is a benefit for your kind of property business. It does give you ultimate transparency. I've got some rental properties separate to my own that I track on a separate license of Xero. It makes it really, really easy to see the kind of income and expenses that I've got with that person that I own those properties with. And I think an accountant would help you, and choosing the right accountant is really, really important. So look around in the area and see who is, for example, if you're looking at Xero, you'll see Xero certified people have, they've got a lot of licenses. You might see gold members, for example, where they've obviously got a lot of licenses of Xero. So they're really, really familiar with it as well. Anyway, I think I'll wrap up there, and I hope you've enjoyed this podcast about making tax digital for landlords. If you're not sure how this affects you, go and do check the HMRC guidance on it. There is a fact sheet on my blog that you can download. So if you go to askjt.co.uk/blog, you'll be able to find that and have a bit of a search around. Please consider subscribing to this podcast. It makes a huge difference to me if I can see those subscriber numbers growing, and it spurs me on to produce more great content for you as well. Thanks for tuning in, and I will see you at the next episode. Thanks, bye. Thanks for listening to the Ask JT podcast. Subscribe for a weekly episode, and if you found this useful, share it with a fellow business owner who might benefit.